Uber, Lyft, Doordash, Instacart. If you work for any of those companies and you're thinking of getting a loan, and what I mean by working at those companies, I don't mean corporate. I mean, you are the DoorDasher bringing me my pizza at 9 o'clock at night. You're awesome, thank you. You are the Uber driver picking up people from the airport so they don't have to do rental cars and get lost and all that nonsense. You're making it so people don't drive drunk. Fantastic, you're great. Instacart, you may be my hero. You're making it so women can stay chained to their desk working instead of going to grocery stores. Thank you so much. Okay, that's who I'm talking about. I'm not talking about at a corporate level. I am talking about you are the dasher, the driver, and the shopper. Okay, so let's talk about how a lender looks at your income. And I was trying to figure out how to title this video, and I was almost like next gen income, because this is a newer sort of income for lending. You know, people have had side jobs and whatever since the dawn of time, but this isn't really necessarily a side job. For some people, it's a side job. For some people, it's a full-time job. And that's where a lot of the confusion comes into play. So when I'm qualifying someone, you know, sometimes I'll have it like maybe it's a teacher and they're like, yeah, but I also make, you know, $500 a month as DoorDash. Well, okay, I can only count that income if you have a 2-year history on your tax returns showing me what you made, okay? And that goes for Uber, Lyft, Instacart, and DoorDash. With any of those companies where you're basically 1099, you're not a direct employee of the company, we have to be able to see how you treat the income on your tax returns, okay? And that's where a lot of it can get hazy because, you know, you're basically self-employed. Okay, you're self-employed, you're contracting the work, right? You're contracting to pick up that sandwich or whatever you're doing. And as being self-employed, it's very normal for you to want to write everything off, okay? And just as with any self-employed borrower, if we look at your tax returns and you've written everything off, I cannot use the income. It does not matter if you show me a transcript of all the deposits into your account, okay? And then we're talking about Fannie Mae, Freddie Mac, Ginnie Mae. We're talking about your traditional loans here, okay? So if you show me everything, it doesn't matter. I'm gonna go to your tax returns. And if your tax returns show that you wrote everything off, that's a problem. It's a problem. So I want to be really upfront with you guys, whether this is a full-time job or a part-time job, okay? If you're thinking you want to buy a house, you need to be very aware when you're doing your tax returns to only write off what your true expenses were, okay? Now, if you do that and you're like, oh, I made $30,000, but I had $20,000 in expenses, okay, is that the best job? Probably not. But if you look at it and you go, okay, I made $30,000, my expenses were $5,000, okay, that's a great job, right? And look, we're not gonna throw shade at you in terms of like, oh, well, you only made $10,000 off of it. No, that's just what we're gonna be able to use. So there's certain stuff we can add back in, such as depreciation, some mileage, but overall what I'll see, and I see this with Uber drivers a lot, they're making bank, but then I look at their tax returns, everything is gone. Everything is gone. So, you know, and I can see that, you know, the cost of maintaining the cleanliness of the car, the snacks for the car, and then sometimes it's just very creative stuff that's being written off. So it's important for you guys to know we're not gonna go with the transactions showing, you know, what you got deposited. We are gonna be looking for those tax returns. And in order to use that income with a traditional loan, because we're talking about traditional loans, your Fannie, your Freddie, your Ginnie, your 30-year fixed loans, okay? In order to use that income, I need a 2-year history, okay? 2-year filed taxes history in order to use that income. So I hope this video has been helpful. You know, we're a little bit past tax season now, but definitely start planning for next year because, you know, as a lender, I hear a lot, well, can't I use this? Why am I not using this? I make this. I've been doing this for 6 months. I'm making $3,000. I had a dasher. Oh my God, he was in LA. He was making like $3,000 a month in tips on DoorDash. And I was like, wow, those celebrities tip big. He's like, it's not them that tip. It was funny. Anyways, but yeah, like it doesn't matter. We have to have that 2-year history and it has to be consistent. Something else for you guys to keep in mind is that an underwriter will take into account. So let's say that you're an Uber driver and you're an Uber driver in New York City, but you want to move to Montana, okay? Are you going to have the same level of income in Montana as an Uber driver? Is there the same demand, right? And that's something you guys want to think about. You know, I haven't hit too much of that, but if you are in those service-related businesses and you're looking at buying out of state, what you're really going to want to look at as well is there a demand for my business in that state? Because I can tell you guys, there's certain parts of the country where it's not a thing, you know, which I think as soon as everyone gets a taste of it, it will be a thing everywhere. But there are certain parts of the country where it's like, yeah, I mean, New York City, the density, the demand versus Montana, it's a different world, you know. Beverly Hills versus Ohio, it's a different world, you know, there's a different demand there. So it's just really important that you guys take all of this stuff into consideration. We want to use your income. We just are going to need a 2-year history, and ideally you're staying in the same location so that we don't have to go into the questions of how's this going to affect your business. So I hope this has been helpful. If you guys have any other questions, let me know. One more note, so I've said 2 years multiple times here, and the other reason I want to say that is that you have a main job as like a teacher, right? And then you do Doordash, right? It tells you so much about the education system in California that is the first example I went to. We have so many teachers doing multiple jobs in order to be able to afford to live in California. But if you are also doing Doordash, you have to have a 2-year history of having 2 jobs as well. So that 2-year thing is definitely going to hit. So you want to make sure if any of those jobs are side jobs, it is 2 years. We need the 2 years on the taxes anyways, but just know it's going to come into play as a second job as well. So questions, comments, as always, leave them. I am licensed in 48 states, and I'm happy to help you guys in any way I can. Thanks so much for watching.